All right, so let's dive right in. It's Tuesday, April 1st. It's about 5 p.m. out here on the West Coast.
Wow.
And really, all eyes are on tomorrow, on April 2nd, which is the day that President Trump has called Liberation Day.
Uh-huh.
And that's the day that we expect to hear his announcements on these reciprocal tariffs.
Oh.
Now, you've probably felt the market doing a bit of a dance in anticipation of all this.
Yeah.
And that's a big part of what we're going to unpack in this deep dive.
For sure.
But there's also a really significant story that's kind of unfolding simultaneously over in the crypto space. And it's the interplay between those two worlds that we really need to understand.
Yeah, I think that's what's so fascinating about all this is that you have these two seemingly very different things that are actually becoming more and more interconnected.
Exactly.
You know, you have on the one hand these traditional government policies around trade.
Yeah.
And then you have this still emerging and evolving world of digital assets and cryptocurrencies. And the uncertainty around these tariffs isn't just, shaking things up in those established markets. It's also creating this whole backdrop against which the crypto markets are operating and sometimes even reacting in really unexpected ways.
Right. And before we jump into the meat of all of this,
Yeah.
I think it's super important to just give a critical heads up to everyone.
Okay.
It is April Fool's Day.
Oh, yeah.
And the misinformation machine is already working overtime out there.
It's true.
We saw that fake tweet that was claiming an immediate end to all tariffs against China, Canada, and Mexico.
Yeah.
That's totally false, by the way.
100%.
Absolutely false. And then there was that really convincing-looking fake Reuters image
Oh, yeah, I saw that one.
that was going around about the EU supposedly restricting Bitcoin wallet usage to, like, banking hours.
Yeah, yeah.
That was also a prank.
It was a good one.
So please, folks, today, of all days, double-check your sources.
Yeah, it's so important, especially in this environment of economic anticipation and uncertainty.
And those kinds of pranks can, unfortunately, muddy the waters even further.
Absolutely. So let's try to bring some clarity to the situation and really unpack what we know so far about these expected tariffs.
All right, let's do it.
The latest reporting that we're seeing, particularly from the Washington Post, which is citing White House sources, suggests that we could be looking at something around a 20% tariff on a pretty wide range of imported goods.
Okay.
However, there's also the possibility of a more kind of targeted reciprocal approach
Right.
that's aimed at specific countries or specific sectors.
Right.
So there's still some uncertainty about, exactly how this is going to play out.
Yeah.
But regardless of the specifics, the message coming from President Trump seems pretty clear. He believes that this is the necessary step to restore what he calls fairness in the U.S. economy.
And we should expect that announcement tomorrow.
Yeah, that's right.
Yeah.
So thinking about the potential ripple effects of all of this, I mean,
Yeah.
they could be pretty far-reaching, right? Oh, they absolutely could be. I mean, think about European car manufacturers for a second.
Okay.
A 25% tariff on imported cars wouldn't just make those vehicles more expensive for American consumers.
Right.
It could force these companies to completely reevaluate their supply chains,
Wow.
potentially impacting jobs in Europe and even leading to shifts in where they choose to actually manufacture their cars.
Yeah, you're talking about a potential restructuring.
Exactly. It's not just about the price tag in the showroom.
Yeah.
It's about the whole structure of global trade in a massive industry.
Right. And this isn't just limited to European car companies either.
No, not at all.
I mean, major automakers from Japan and South Korea, like Toyota, Nissan, Hyundai,
Right.
they all rely heavily on the U.S. market.
Yeah, and it's interesting to see how some of them are already reacting to this uncertainty.
Yeah, what have you seen?
Well, Hyundai, for example, they've already started warning their U.S. dealers about potential price hikes. But at the same time, they're also highlighting this massive $21 billion investment they've made in U.S. manufacturing. So is that a strategic hedge? Are they trying to kind of soften the blow of any potential tariffs?
Or they're trying to get ahead of it.
Exactly.
Right.
Or even, maybe gain some political favor, regardless of what the final decision is on these tariffs.
It's such a fascinating question. I mean, it definitely feels like they're trying to navigate a really complex situation.
Yeah, they are.
And it's so interesting to see how different players are kind of positioning themselves in all of this.
It is.
You have President Trump, who's basically downplaying any immediate market dips.
Yeah.
He's calling them just snapshots. And he's expressing this confidence that his overall tax policies will ultimately benefit Wall Street in the long run.
Right. So he's taking this very long-term view
Yeah.
and downplaying any sort of short-term volatility.
Exactly. And then on the other hand, you have someone like Israel's finance minister, who's made this very proactive move to eliminate tariffs on U.S. imports.
Wow.
It seems like a very clear attempt to kind of preempt any potential retaliatory tariffs from the U.S.
Yeah, get out ahead of it and maintain those good relationships.
Exactly. And then you have Mexico's President Sheinbaum, who's taking more of a wait-and-see approach.
Okay.
They're planning to announce their response on April 3rd. So after the U.S. has kind of laid their cards on the table.
Right, so they're going to wait and see what the specifics are before they make their move.
It really feels like we're watching this global economic strategy game.
It does. It's like a chess match.
Playing out in real time.
Yeah, and it really underscores just how interconnected the global economy really is.
Mm-hmm.
You know, tariffs at their core are designed to introduce this friction into international trade.
Okay.
And that friction, it doesn't exist in a vacuum.
Right.
The fact that we're already seeing these anticipatory moves and these planned responses from different countries highlights just how high the stakes are and how real the potential is for this cycle of retaliatory measures, which could then amplify the initial economic impacts far beyond what we might see immediately.
That's a chain reaction.
It is.
All right, so let's kind of step back for a minute and get a sense of where the traditional markets were as of the U.S. close today.
Right.
It was a bit of a mixed picture for stocks.
Yeah.
The Dow Jones Industrial Average was basically flat down by a tiny 0.03%.
Okay.
The S&P 500 saw a slight positive move of 0.38%.
Right.
Interestingly, the NASDAQ, which is very tech-heavy, and the small-cap Russell 2000, they were both practically unchanged. But what's interesting is that when we look at the pre-market futures for tomorrow morning, there's a bit of green across the board.
A little bit of optimism.
Yeah, maybe a cautious optimism, right?
Yeah.
Perhaps there's a feeling that the worst-case scenario might not materialize, or maybe it's just the market bracing itself for some clarity.
Yeah, I think that's a good point. I mean, it's interesting to see this relative calm before what could be a pretty significant policy shift.
Yeah.
It suggests that the market has, to some extent, already factored in the possibility of these tariffs.
Okay.
But the specific details, you know, the scope, the level, the targeted countries, those are going to be the crucial catalysts for any really big market reactions tomorrow.
Yeah.
So the market is kind of in this holding pattern.
Yeah.
Waiting for that concrete information before making its next big move.
It's on pause.
Exactly.
All right, over in commodities, gold is holding pretty steady at an elevated price around $3,146 an ounce.
Okay.
But it didn't really move much today. And oil also remains stable at $71.20 a barrel.
All right, so pretty flat across the board in commodities.
Yeah, pretty much.
Yeah.
Now let's pivot to the cryptocurrency markets, which, as we said, have their own unique dynamics at play.
Okay, this should be interesting.
Bitcoin is currently trading above $85,165.
Right.
Showing a gain of 2.87% on the day.
Nice.
Ethereum is at $1,904.
Okay.
Up by a solid 3.86%.
Not bad.
Solana is at $126.58, with a more modest increase of 0.76%.
Okay.
And Dogecoin saw a pretty significant jump of 8.45%, reaching 17 cents.
Wow, Doge is having a day.
Yeah, Doge is doing its thing. And overall, the total market capitalization of the entire crypto space is hovering right around $2.84 trillion.
So a healthy amount of activity there.
Absolutely. And you know what I find particularly interesting?
Yeah, what's that?
Is Bitcoin's relative stability over the past week or so.
Okay.
As we mentioned, it's mostly been trading within a pretty consistent range since about March 19th. And notably, it's holding above the levels we saw in the week prior.
Right.
So this could suggest that the market's kind of in a holding pattern.
Yeah, maybe wait and see what happens with these tariffs.
Exactly, and perhaps even exhibiting a bit of a decoupling from those immediate anxieties that we're seeing in the traditional markets.
Yeah, that's a really interesting point. I mean, does this mean that crypto investors are just less concerned about these specific tariff announcements?
It's a good question.
Or are there other factors within the crypto ecosystem that are driving the price action right now?
Right, and speaking of those other factors,
Yeah.
the crypto world has been buzzing with some really significant institutional and regulatory developments.
Oh, yeah. Fill me in.
One that's caught a lot of people's attention is Eric Trump's newfound interest in Bitcoin.
Oh, wow. That's interesting.
Right, so for those who don't know, his background is in traditional hard assets, things like real estate, hotels, golf courses.
Uh-huh.
So this move into the crypto world seems like a bit of a departure for him.
It does, yeah.
And the catalyst for this shift seems to be the closure of Trump Organization accounts
Okay.
by banks like Capital One and Chase
Right.
in the wake of January 6th.
Right.
He's publicly framed this as politically motivated lawfare
Uh-huh.
and an abuse of power by these financial institutions.
Interesting.
So you can kind of see how this experience might have pushed him towards Bitcoin.
I see what you mean. It really highlights that core appeal of Bitcoin.
Yeah.
Its resistance to censorship and that decentralized nature.
Exactly. It's that control,
Yeah.
that ability to kind of bypass the traditional system.
Exactly.
So Eric Trump's experience, as he describes it,
Yeah.
seems to have really opened his eyes to the potential of blockchain technology
Uh-huh.
to facilitate transactions more efficiently
Right.
at a lower cost and faster.
Cheaper, faster, more efficient.
And what's interesting is that he seems genuinely enthusiastic about this space.
Well, as I said, this aha moment.
Yeah, and it really resonates with those core principles of decentralization and financial autonomy
Right.
that have always been kind of drivers of early Bitcoin adoption.
For sure.
It really underscores that idea of Bitcoin as a hedge,
Yeah.
not just against inflation,
Mhm.
but against the potential for arbitrary actions by centralized authorities.
Like those banks that closed his accounts.
Exactly. And this is coming from someone with a very traditional finance background.
It is. It's a big shift.
Yeah. And on a related note,
Okay.
we're expecting the U.S. Treasury Department and various other federal agencies
Uh-huh.
to publicly disclose their holdings of Bitcoin and other cryptocurrencies
Right.
by April 5th.
Okay.
And this is following President Trump's executive order on this. So
Right.
that's going to be really fascinating to see what kind of data comes out of that.
Yeah. What do you think we might learn from that disclosure?
Well, I think it's going to offer us a really significant level of transparency
Okay.
into how the government is engaging directly with digital assets.
Right. Are they holding any? Are they buying it? Are they selling it?
Exactly. And it could signal, a potential shift in how these assets are perceived and treated by regulatory bodies,
Uh-huh.
maybe moving towards a greater acceptance or at least a more informed understanding of the space.
Right. Because right now there's still a lot of uncertainty around how governments view crypto.
Exactly.
Yeah.
And then the size and the nature of those holdings could also have implications for market sentiment as well.
Oh, yeah, for sure. If it turns out that the government has been quietly accumulating Bitcoin,
Right.
that could send a really strong signal to the market.
Absolutely. And speaking of the regulatory landscape, it continues to evolve.
Yeah, it seems like there's always something new happening in that space.
There is. And the House Financial Services Committee's Subcommittee on Digital Assets
Uh-huh.
is scheduled to hold a hearing on April 9th.
Okay.
It's titled The Future of Innovation and Digital Assets in the U.S., Adjusting U.S. Securities Law for the Digital Age.
Wow, that's a mouthful.
Yeah, it is.
But it sounds like they're really trying to figure out how to integrate crypto into the existing legal framework.
Exactly. And they're really grappling with how to structure this new asset class under U.S. securities law.
Right.
So what's the significance of this kind of hearing?
Well, I think these hearings are absolutely crucial.
Okay.
They serve as this vital information gathering process for lawmakers as they start to consider future legislation.
Right. They're doing their homework.
Exactly. And by bringing together experts and stakeholders, they're basically trying to build this foundational understanding
Yeah.
of the complexities of the digital asset space and how U.S. securities law might need to adapt
Okay.
to both foster innovation but also protect investors.
It's a balancing act.
It is. It's this really delicate balance.
Right.
And these hearings are a necessary step towards providing greater clarity and structure to this rapidly evolving market.
It's a work in progress.
It is.
So shifting our focus away from U.S. regulations for a moment,
Okay.
we're seeing continued signs of institutional adoption in other parts of the world.
Oh, yeah. Like where?
Well, the Japanese company Metaplanet just announced another big Bitcoin purchase.
Wow.
They bought an additional 696 Bitcoin.
That's a lot of Bitcoin.
It is, and it brings their total holdings to over 4,000 Bitcoin.
So they're clearly bullish on Bitcoin.
Yeah, they clearly see the long-term value in holding Bitcoin as a treasury asset.
And this is a publicly traded company, right?
That's right. So what does that tell us?
I think it's a really strong indicator of institutional conviction in Bitcoin's long-term potential, especially in a market that's still navigating all these regulatory uncertainties in many regions.
Yeah.
It's just that for some companies, Bitcoin is increasingly seen as not just a speculative asset,
Right.
but as a strategic holding.
Yeah.
that could offer diversification and that potential long-term growth.
It's a store of value.
Exactly.
And speaking of significant Bitcoin holdings,
Oh, yeah.
Tether, the company behind the USDT stablecoin, they minted another $1 billion worth of USDT yesterday.
Okay.
And their treasury now holds over 100,000 Bitcoin.
Wow, that's a lot of Bitcoin.
It's massive, and it's currently valued at around $8.29 billion.
That's an incredible amount of money.
It is, and they've stated that these purchases were made with their profits.
So they're putting their money where their mouth is.
Exactly. So what kind of signal do you think that sends to the market?
I think it inspires a sense of security regarding market liquidity. Knowing that a major stablecoin issuer holds that much Bitcoin as a reserve asset can provide a backstop and potentially mitigate concerns about systemic instability within the crypto ecosystem. It's a big vote of confidence.
Yeah, absolutely. We also got news that GameStop has completed its sale of $1.48 billion worth of bonds. And they've explicitly stated their intention to use some of those proceeds to buy Bitcoin.
Interesting.
So that's another example of a more traditional company making a pretty significant foray into the crypto world.
Yeah. What do you make of that move by GameStop?
Well, I think for a company that's undergoing a transformation like they are, this could be seen as a very forward-thinking move to diversify their holdings and potentially tap into an asset class with long-term growth potential.
Makes sense.
Now, this next piece of news really grabbed my attention.
Okay, I'm all ears.
BlackRock CEO Larry Fink issued a pretty stark warning in a recent letter to investors about the U.S. dollar potentially losing its status as the world's reserve currency.
Wow.
And he attributes this to the increasing levels of U.S. debt. But here's where it gets really interesting. He suggested that Bitcoin, not another national currency, could be the potential replacement.
That's a huge statement.
It is, especially coming from the head of the world's largest asset manager.
Exactly. I mean, when Larry Fink says something, people listen.
Right. So what are the implications of someone like him making a comment like that?
I think it's a sign of a real shift in how Bitcoin is being perceived at the highest levels of finance. For the CEO of BlackRock to even suggest that Bitcoin could one day replace the U.S. dollar as the world's reserve currency? That's a really powerful statement.
It is.
It signals that even these traditional financial giants are starting to question the long-term stability of fiat currencies, especially in the face of rising national debt.
It's like the foundation is shaking a little bit.
Exactly. And while it's not necessarily a prediction of imminent change, it does highlight this growing concern about the traditional financial system.
And it's not just about the U.S. dollar either.
No, it's about the entire concept of fiat currency.
Right, and he didn't stop there.
Oh, there's more.
Fink also reiterated his belief in the future of asset tokenization.
Oh, right. Tokenization.
Yeah. He's predicting that tokenized funds representing all kinds of assets.
Like what kind of assets?
Stocks, bonds, real estate, commodities.
Wow. So basically everything.
Pretty much everything. He thinks these are going to become as commonplace for investors as ETFs are today.
So he's painting a picture of a much more efficient financial system.
Exactly, one that's more accessible, more liquid, and potentially much less expensive to operate.
And that could open up a lot of opportunities for people who are currently excluded from traditional financial markets.
Absolutely. Now moving on to the IPO front. Circle, the company behind the USDC stablecoin, has officially filed to go public.
Wow. So they're going for it.
Yeah, and it's interesting to remember that historically, major crypto company IPOs like Coinbase back in 2021 have sometimes coincided with periods of peak market enthusiasm.
Like the top of a market cycle.
Yeah, exactly. So does the timing of Circle's IPO maybe offer any insights into the current market cycle?
It's definitely something to think about. I mean, while it's not a perfect predictor, the timing of these big IPOs in emerging sectors can sometimes reflect that kind of exuberance.
Yeah, that frothiness.
Exactly. And that can sometimes precede a correction.
Right. So it's something to keep an eye on.
For sure.
And on the topic of ETFs, Grayscale has filed an S3 form with the SEC to convert its Grayscale Digital Large Cap Fund. The ticker symbol is GDLC.
Got it.
Into a spot ETF.
So for those who might not know, what's a spot ETF?
A spot ETF basically holds the actual underlying assets. So in this case, Bitcoin and other cryptocurrencies.
So it's a more direct way to invest.
Exactly. It's a more direct way for traditional investors to get exposure to these assets without having to directly buy and manage them themselves.
Less hassle.
Yeah. And if we look at GDLC's holdings,
Hmm.
it's heavily weighted towards Bitcoin at almost 80%,
Okay.
followed by Ethereum, XRP, Solana, and Cardano.
Got it.
So this could be another really significant avenue for broader institutional and retail adoption.
Yeah, make it easier for people to get in.
Exactly, in a more philanthropic development.
And okay, that's nice to hear.
The Human Rights Foundation has announced that they've granted a total of 10 Bitcoin
Wow.
to over 20 different projects around the world.
That's amazing. And what are these projects all about?
They're focused on various aspects of the Bitcoin ecosystem,
Okay.
including core development enhancing user privacy
Yeah.
and promoting financial freedom in regions where it's often lacking.
That's really important work.
It is, and it's a good reminder that this technology has the potential for real positive impact
Yeah.
beyond just investment and speculation.
It's about more than just making money.
Exactly. All right, and here's a noteworthy regulatory development out of Europe.
Okay. Binance has announced that they're temporarily suspending spot trading for the USDT stablecoin within the European market.
Oh, why are they doing that?
This move is reportedly to comply with the upcoming markets in crypto assets regulations.
Oh, right, Micah.
Exactly. And what's interesting is that it seems like futures trading involving USDT might still be available
Okay.
for European users for now.
So just spot trading is affected.
It seems that way, and it's important to note that this only applies within the EU.
Right.
So this is a really clear illustration of how these new regulatory frameworks are starting to shape how crypto platforms operate in different parts of the world.
Absolutely. And what exactly are these MiCA regulations trying to achieve?
Well, they represent a really comprehensive legal framework that's being rolled out across the entire European Union.
Okay.
And their main goals are to provide more regulatory clarity for the crypto industry,
Okay.
enhance consumer protection
Right.
by setting standards for crypto asset issuers and service providers.
Makes sense. And to promote market stability within the digital asset space.
So basically bring some order to the Wild West.
Pretty much. And Binance's move to temporarily suspend USDT spot trading
Yeah.
is a direct consequence of those new rules coming into effect.
So it's a real-world example of how these regulations are having a tangible impact.
Exactly. Finally, over in the NFT space,
Okay.
we've seen the NFT marketplace X2Y2
Uh-huh.
announce that they're shutting down at the end of April
Wow, after how long?
after 3 years of operation.
And what's the reason for that?
They cited a 90% drop in trading volumes since the peak of the NFT hype back in 2021.
Oh, wow. So a huge decline.
Yeah, and while the underlying smart contracts for the NFTs
Right.
will remain active, the platform itself will cease to exist.
So no more buying and selling on that platform.
Right, and the team is reportedly planning to pivot towards artificial intelligence.
Interesting. So this feels like a bit of a reality check for the NFT market.
Yeah, right after that incredible boom that we saw.
What do you think contributed to this decline?
Well, I think it was a combination of factors.
Right.
There was a cooling of overall market enthusiasm,
Right.
perhaps an oversupply of NFT projects.
Too much of a good thing.
Yeah, and I think there was this realization that not all NFTs hold long-term value or utility.
Right. Not every NFT is going to be the next CryptoPunk.
Exactly, and I think this platform closure is a reflection of that broader cooling down.
Yeah. A sign of the times.
It serves as a reminder that not every hyped sector within the crypto world is going to maintain that exponential growth forever.
Not everything goes up forever.
Right, and it's interesting to remember the intense metaverse buzz we saw around the same time in 2021.
Oh, yeah. That was crazy.
Market sentiment and focus can shift so quickly.
Absolutely. So where does all of this leave us?
Well, I think it brings us to a point where we need to think about our investment philosophy,
Okay, that's important.
especially against this backdrop of potential economic shifts and a very dynamic crypto market.
Yeah, things are changing so fast.
They are, and we've all heard those stories, like Stanley Druckenmiller famously losing $600 million
Yeah.
by shorting tech bubble stocks,
Ouch.
even though his analysis that those stocks were overvalued turned out to be correct in the long run.
Right. So he was right, but at the wrong time.
Exactly. His timing was just off.
Oof.
And then you have figures like Jim Cramer,
Right.
who often seem to make incorrect market predictions.
Yeah. He doesn't always get it right.
He doesn't, but yet he's amassed a considerable net worth.
So being wrong doesn't always mean you lose money,
Not necessarily. And these examples really drive home a really crucial point.
which is,
Being intellectually right about an investment thesis
yeah.
doesn't automatically guarantee financial success.
Uh-huh.
And conversely, making what seem like wrong calls doesn't always lead to ruin.
Interest.
Timing and a deep understanding of market psychology are absolutely critical.
It's not just about being smart. It's about being smart at the right time.
Exactly. And as that old saying goes,
Yeah,
do you want to be right or do you want to make money?
that's a good one.
It's a good one to keep in mind. And it reminds me of that saying in real estate.
Oh, yeah. What's that?
Don't wait to buy real estate and wait.
I've heard that one.
Right. And I think there's a similar wisdom that can be applied to Bitcoin,
Okay.
maybe even to the broader crypto market.
How so?
Don't wait to buy Bitcoin. Buy Bitcoin and wait.
I like that.
Oftentimes, what we perceive as the perfect entry point never materializes.
Yeah, we get caught up in trying to time the market perfectly.
Exactly. And the best time to buy might actually be right now, provided you have a long-term perspective and conviction in the asset's potential.
It's about playing the long game.
It is, and that right time often arrives gradually while you're already holding the asset and letting its potential unfold.
So it's about being patient and letting your investment grow.
Exactly. So here we are,
Less than 24 hours to go.
less than 24 hours away from President Trump's tariff announcement.
And we still don't know all the details?
The specifics are still a bit uncertain, but tomorrow should bring some much-needed clarity.
Hopefully.
Will the tariffs be as sweeping and severe as some fear?
It's the big question.
Or will there be more targeted measures, maybe even some unexpected compromises?
Who knows? Maybe there will be some surprises.
The market reaction is going to be interesting to observe.
Yeah, that immediate snapshot.
Exactly. But as we've discussed, those short-term market swings are really only one part of the story.
Right. The long-term implications are what really matter.
And what matters for you, the listener, is the impact of these trade policies on the broader economy, on inflation, and on the performance of different assets.
Including crypto.
Including crypto. These are the trends that are going to shape the financial landscape for the foreseeable future.
Absolutely. And let's not forget about the U.S. jobs report coming out at the end of the week.
That's right. That's another big one.
Yeah, that'll give us even more insight into the state of the economy.
So the overall message for now is to expect continued volatility. Yeah, and potential choppiness in the markets as these big economic and policy developments unfold.
Makes sense. This confluence of traditional economic policies like these tariffs,
right,
alongside this rapidly changing world of digital assets, with the growing institutional adoption, the new regulations, and even the potential for shifts in global reserve currency status.
Right.